Another management then, and we have the management of InoxGFL Group. That is Mr. Devansh Jain, who's the executive director of the company, joining us on the show to talk about the IPO that they're set to launch. And very good afternoon to you, sir. Thank you so much for joining us on ET now. And let's talk about the IPO and the IPO proceeds. 370 crore rupees will be used for repayment of your loan. What will actually be the debt position after that, and what will be the annual interest cost savings due to this repayment that you are planning to do?
So there are two parts to the IPO. There's a primary piece, which is 370, and the secondary piece is 370. At the Inox Green level, post the primary piece of 370, we expect to make this a net debt-free entity over the next couple of months, given that while you see on the balance sheet about 800 odd crores, 100 odd crores has already come back through, and 370 is the primary piece of the IPO. The remaining 300 odd is the last SPV which we control. We've already sold 3 such SPVs to Adani. This is the last SPV which, once we flip, Inox Green is expected to become a net debt-free entity, and consequently zero interest going forward.
Right, Mr. Jain, this is Vinny joining in as well. What I want to understand in terms of the fresh issue capital, that will be used for corporate purpose. Could you tell us a bit more about your capital allocation from the money raised, and what are the areas of investment that you're looking at?
So, well, primarily, while we have of the 370, 270 clearly identified for debt repayment, the 100 odd, which is towards general corporate purposes, would also be used primarily towards debt repayment, potentially maybe a little bit towards IPO expenses and so on and so forth.
Anish.
All right, let's talk about the advances and the guarantees that are taken from Gujarat Fluorochemicals. What is the total amount of the same? And also, if you would tell us, what is your repayment plan regarding the same?
Well, at the Inox Green level, as I mentioned, our debt pertaining to the business would be approximately 370 to 400 crores, which post the IPO would become zero. The guarantees are to that extent, and clearly post the IPO, these guarantees would fall off and would not be required.
Right, and what is your business outlook and expansion plans going forward as well now, Mr. Jain?
So I think from an outlook perspective, renewables is the buzzword for the past couple of years. And I think from an India context, we've got a target of 500 gigawatts by 2030. We are presently at about 150 gigawatts. That would require us to install almost 40 to 45 gigawatts of renewables year on year. Now, whether we achieve 70% of that goal or 80% of the goal, the sheer numbers are significant. Within that, as more and more renewable energy equipment gets applied, the consequent demand for renewable energy services is expected to grow. So we expect to see a very, very significant growth on the renewable energy side. There are various estimates from various agencies. Of course, in our RHP, we have certain estimates by CRISIL as well. But all I can say is we expect very, very significant growth. We've been growing at about 40% CAGR over the past 9 years at the Inox Green level. So that just gives you a little flavor about this business. In terms of going forward, the growth, I kind of already answered that by talking about both the organic growth, which will kick in thanks to the Inox Wind order book, as well as the inorganic growth opportunities which we believe will play out post the IPO. We're looking at significant inorganic growth opportunities, given a lot of players in the sector have gone bust, and clearly a lot of unorganized players are servicing these renewable energy equipments, and we would like to kind of transition the sector from an unorganized sector to an organized sector.
Okay, thank you so much, Mr. Jain, for joining in with us this afternoon and giving an understanding of what we should be expecting